Wonderful good day, ladies and gentlemen, to the copper update on Commodity TV. The copper price continues to rise and we have now broken through the $10,000 per ton mark. According to our point and figure chart, we are now at $5.11 per pound in US copper, which corresponds to a triple top. The next target would be $7 per pound, which equates to around $15,000 per ton if the $5.50 per pound mark is breached. We believe that this will be the case by the end of 2026 as copper is becoming increasingly scarce and we expect a market deficit from this year onwards that will continue in the coming years. On the one hand, the price increase is justified by the US tariffs as copper still needs to be secured cheaply if it has to be delivered in the future. The difference between US copper futures on the COMEX at $5.11 and on the LBMA at only $4.46 per pound is also interesting. According to market participants, the buying mood is immense. This is creating a nice arbitrage for traders who are now having more material delivered to the USA, and 90 to 100,000 tons of copper are set to be on the way. According to Bloomberg, Glencore and Trafigura in particular are playing a massive role here. Donald Trump's tariffs are on one side of the coin. The other side is simply a further increase in demand from copper users and the looming market deficit. Virtually no major deposits have been found in the last 14 years really. There is also a lack of new large-scale mines that will go into production in the next 2 to 4 years. The copper market will already be at around 28 million tons this year. Assuming global economic growth of 2% per annum, we will need around 600,000 tons as an average more copper per year over the next 5 years just from basic growth alone. Add to this the global investments in the solar and wind industry and in infrastructure. You don't have to be a math genius to see the connection. The copper price will continue to rise, as will uranium and silver. It therefore makes sense to keep an eye open for interesting copper developers. One of our favorites for the USA is the Canadian company Arizona Sonoran Copper. The company is developing the Cactus copper project into production, which would mean copper from the USA for the USA and no tariffs on top. The copper would be extracted in open pit mining and cathode copper could even be produced. There would be many customers on the doorstep really. The existing infrastructure such as roads, electricity, rail connections and the workforce would have an advantageous effect. The preliminary economic study, the PEA, showed an already very good NPV at 8% discount of $2 billion and an IRR of 24% at only $3.90 per pound of copper. The approval process is straightforward and only has to be completed at state level as it is located on private land. The pre-feasibility study is expected to be announced in the second half of 2025 and the company plans to immediately start the bankable feasibility study. The initial mine operating life is 31 years with around 86,000 tons of copper production per year as an average. The investment costs amount to $668 million. After the PFS, the pre-feasibility study, these are likely to rise to around $800 million, which would still be perfectly acceptable. At $4.50 copper per pound, the figures look even better. The NPV with an 8% discount rises to almost $3 billion and the IRR to 30%. Mind you, this is all after tax. The shareholder base is a who is who of the industry with Hudbay, Rio Tinto, but also Sprott, Conwave, Earth Resources Fund, RBC Asset Management and many more. With a market capitalization of around 310 million Canadian dollars, the company is still reasonably valued. We issue a buy signal for the share and set an initial price target of 3.5 to 4 Canadian dollars. Another Canadian copper developer is Foran Mining. The company is bringing the McIllvenna Bay copper project into production in Saskatchewan. Construction is progressing according to plan and commercial production is expected in the first half of 2026. A 1% net smelter royalty was also reacquired from companies controlled by Cameco and South32. The surface construction is over 24% complete and the detailed engineering work is over 90% complete. Well over 2,100 meters have already been driven underground and the total will be approximately 2,300 meters. The concrete work is progressing excellently and is ahead of schedule. The floor slab work for the above ground infrastructure is also ahead of schedule and 450 employees and subcontractors are currently employed. The hot phase of ore commissioning is scheduled to begin in the second half of the year. We expect the mine to be in full production on time next year with copper, zinc, silver and gold. The plan is to build the first carbon-neutral copper mine in Canada by design with an 18-year mine life producing an average of 65 million pounds of copper equivalent annually. With Fairfax Financial, Agnico Eagle, as well as the management and Pierre Lassonde, almost 48% of the shares are already in solid hands. Market cap is around 1.5 billion Canadian dollars. The Foran chart has formed an ascending sideways formation which should soon be broken to the upside. We then see a price target of 6 Canadian dollars 25 cents as realistic. Copper has only just started its upward trend. Time to stock up and build up on solid dividend payers such as BHP and Rio Tinto, but as well as good developers such as Arizona Sonoran and Foran Mining. I am in. You can also find all the information on our Commodity TV app in German and English, as well as everything to do with commodities. Please note the disclaimer. The shares discussed are or will be part of the SRC Mining Special Situation Certificate, and I'm a shareholder in the companies. Thanks for watching us, and bye-bye from Switzerland.